let me kind of throw in some details first. First, I'm not gonna be streaming every single day. I know some of these streamers online, they like to post content every single day, even when there's really nothing going on, or well, I've seen some just post 3 4 minute videos of just reading uh, articles online. Like, okay, if I wanted a voice reader, I would just install it on my Chrome. But my kind of perspective is when there's something interesting happening, that's when I'm more opposed to stream information about it. So, to kind of remedy this sort of low uh, content push, I do recommend subscribing. This would, no, not even subscribing, more like pushing that little bell. That will actually tell you when there's new content that I'm posting. I don't mind if you don't. You can like this video, you don't have to. You can watch it all the way through, that's fine. But for the case scenario that you want to keep up with big information happening in the markets and the charts and random things that are actually exploding, um, that might be a good way to keep up with the process. So that's first things first. Second, I want to go over some of the plays that I've done so far and kind of review a little bit of a risk to reward process. So I, I fucked up a few times. I'm not perfect. I'm not a hero. But the case scenario is that once you realize your details, you're kind of trying to identify your risks and rewards, right? So let's take a look at one of my portfolios here. Now you can see some data details. These are basically the overall outcomes of some of the buys and sells that I've done, right? So support.com was one of those plays I did maybe in my video 2 3 weeks ago, maybe more than that. But now it's not support anymore, it's GREE. And once that transition happened, something weird happened with the stock. Now I don't know the pipes and plumbing of the system, but what seems that happened was that once the stock was changed, maybe there's a delay in the actual conversion of shorts to be covered, or maybe they just disappear. I don't know if that's a thing that can happen within the market. If one company gets owned by another company, what happens to the shorts? So support.com was one of those companies. I got out before any of that happened. I did leave some in, which prompted me to lose, I think, 1,000 or 2,000. Technically, I had about 7,000 total. But you know what? You win some, you lose some. But 5,000 is a okay with me. Now, currently, there's the SDC happening in the background, and that's an interesting play that's happening now, which I want to go over. But you will notice that there are some big losses here. Not as big as my gains, which is actually what you want to do. You're going to have losses regardless, right? You're going to make losses no matter how much you try not to make any losses. But the end result is, are your gains, are your risks balanced towards your positive values, right? We're going to kind of analyze a little bit about how to identify your risks based on technical analysis in one of the charts. Yeah, I'm going to do a quick analysis here. Maybe I'll make a full out video later. But you'll notice that my losses are not as drastically huge as my wins, right? And that's kind of where you want to balance it all out. So BBIG, I made some, I lost some. I think my overall was a loss. GameStop, I kind of go in and out, usually to try and support other plays. I don't leave completely, but I do take a few out here and there. I think this is bought on a very high level, and I decided, why do I just keep money in unused when I can play it somewhere else and recover that loss? CEI is a current play that's actually playing out very well, but I did enter at the wrong time. I'm currently working to recover my losses, which is a very interesting situation, which I really want to focus on. This company here has some potential, but very short term potentials, and maybe long term, because there's something that happened recently that might actually make it an actual squeeze play. This was a squeeze play per se, but there's a limitation to how much it'll squeeze until what just recently happened, which we don't have the data on it yet, but I will make a point to point out what I'm looking for in order to make this an official squeeze play. The others I played around with, I didn't get in at the right times, and so on and so forth. But I'm overall happy with my gains. So that's kind of an overview of my portfolio so far. And again, nothing I say is financial advice. This is for educational purposes only, as it is meant to prepare you for any form of uh, personal endeavors into the market to make sure you understand what you're looking for, what you're looking at, and basically having you be prepared with information and whatever I know personally. I'm not a professional. Again, I'm not an investor. I'm not a degree holding institutional investor, but I have been studying not only the numerical aspects of financial markets, but I'm a programmer. So I've created a couple of applications that will also use specific statistics to kind of probe for your risk and reward levels. So, first things first, what the heck is happening with CEI? This is a very interesting play, and I do really, really much like it because look at it now in the aftermarkets. This is intense. Now, the problem with CEI was that not too long ago it dumped heavy. Okay, it dumped very, very heavy. And this dump here is what I want to focus on. These dumps here, this big dump here, of course, this is a reward profit situation. People are gaining their profits, and it was consolidating very well. It actually had a very strong base. You see this in the market all the time. After a big blow up, there's a nice consolidation downwards. You even see this in SHIBA, which I want to also technically look at because there is a relationship in the technical charts, right? So if we take a look at SHIBA in a similar format, SHIBA is a crypto, it had a huge run up and then wait, that's not SHIBA, that's Dogecoin. Similar, but not the same. Right here. So it had a huge run up, but at the left wing, it had a nice consolidation, right? So it passed this 4 zeros, 22 cents area. It went up pretty high to 4 zeros and 35, but people got their profits, benefited from that rise, and then it fell back down. But notice that the consolidation is strong. It is focused on the volume profile line of support. So this is extremely bullish. Oh, I would say it's not bullish yet, but rather it's consolidation. The next few steps will determine whether it's bullish or not. It could be well, like a head and shoulders pattern could kind of pop up from here, but the right shoulder is much weaker than the left, which does show more focus on consolidation. This could go on for a while if there is a kind of future for Shiba, but if it does drastically break down below this line, we could be seeking a 4 zeros and 1 8. But I highly doubt it since the recent surge of the popularity of SHIB is actually very good compared to Doge because of its functionality, which we'll go over later. So in the normal case scenario, you do have a dump, you have a consolidation. So here we have this huge growth, a pretty decent dump. That's like a 40% dump right here, 50% near. And then it came back up and kind of tried to consolidate around this $2.09 line. But it continued and continued. And this is where it got weird. This was very much not expected, right? This was a bull flag. This was a directional bull flag. This should have broken in an upward direction. It wasn't so strong, but notice that it did have a consistent ricochet back and forth between the flag space here. And then it gained strength and was about to essentially test again into our upper bound, but it got kicked down very hard, down to almost, well, $1, but I believe it went down to like 90 cents for a brief moment. So this, in my perspective, we should take a look at a little bit further. What does this mean? Why did it just break down like this? My suspicion is the following. If we take a look at the Ortex stat, the one thing I didn't like about CEI was that there are no naked shares to report. There are no FTDs anywhere in its history. So much like most of my kind of focused squeezes, my concern with CEI was that there were no particular actual fail to delivers. This was a big problem for me personally. So what could have happened? Well, this huge dump came out of nowhere. The situation arose that the actual utilization at that point in time was about 100%. Now it's 88, which does raise a bit of a flag. Utilization again is how much of the loanable or borrowable shares are being used. If I have 100 shares and I can borrow 100 shares, I'm already borrowing or I'm lending 88 of those shares and there's 11 left to be borrowed, right? And what do we do with borrowing? Well, we sell them into the market, create sell pressure, and then buy low to gain our position back and make the money. Explained this in a different video. So this has been drastically reducing, which does raise a small flag of concern, making it feel like we're probably going to be done after this current growth process here. We may not be able to really drastically get out of this. So today is probably the day I leave CEI. But it's not over, and it's the least of my concerns right now because this huge dump at 100% utilization means, where did the selling pressure come from? It was consolidating. People were buying the dips and keeping it steady, and then it got pushed heavy. This is not retail. Retail will not push a stock $3 down to $1. They will not be able to. They don't have the firepower to do so. Retail does not have this kind of money. Who does have this money? It's the retail. It's the institutions, right? These guys, not only do they have the money, they have the ways to create the money or create the shares out of thin air and sell them into the market, which they don't even exist because they're going to close them off in the future and then make them go away and etc. They just have some really skimpy little tactics, and honestly studying the piping, the sewage system of our market, it's completely full of shit. So my biggest suspicion is this was the moment that FTDs came to play. Even though there were no failure to delivers in the past, these were all shares created which will never be able to be bought back unless the stock goes extremely low, right? So we're looking at the $3 to $1. They're looking to possibly cover these short shares, these naked short shares down at the 50 cents level. But this ricochet back up is actually very nice because we are preventing these naked shorts from comfortably covering their positions. They could cover now and they could come at a loss, at least the line below. These guys down here would go at a loss. These guys would have a small profit. But in the end, they don't want to just leave, right? They want to make sure they get the best optimal uh, return. So they're waiting for the sub $1 area for CEI to actually go to. That is my concern. So that kind of stops CEI. We are looking at a ending point. Normally, I take a look at utilization to make sure I know my enemy and their firepower. Currently, their firepower is increasing because the borrowed shares or the borrowable shares are increasing, right? The utilization, the amount available or the amount already being loaned is lower than it was before. Just a few days ago, it was 100%. Yesterday, I believe it was 99.12%. The day before, it was 100%. So today, we are at a kind of breaching point where the shorts can continue to short and potentially even introduce more naked shorts in the process. Okay, so that's my concern at the moment with CEI. I've gained some profits. I'm going to gain a little bit more, and I'm going to probably leave a few shares in just in case. But I'm pretty confident that this situation is basically over for now, but not for the future. This is still a capable play for those possible FTDs that could have came out. So that's it for the CEI. I do really like this return. And look how we returned back into our flag and potentially getting that bull flag reconstructed and possibly even bouncing off pretty high up to the $3 level. I can see $3 being the hard resistance since we hovered here for a while. So I'm probably going to aim my shares to exit around that $3 value. Now, that's CEI. That's why I believe it's a very interesting play. It doesn't have the FTDs, but it does have the support. And here's another case that I looked for, right? I always look for a couple of data points. And one of the other data points is how much does CEI, or how much of the shares of CEI are owned by the apes, the retail investors. And this really caught my eye because this was a power struggle that really, okay, I just saw it, really gained some momentum here. The general public owns 97% of CEI, while the institutions only own 2.7. This is a huge, this is probably one of the biggest ones because even AMC is like 80% at most. So I don't quite like the fact that there's only 2.7% of institutions able to pay us back. This does not include, of course, short sales, but this does include holding of shares. I do, however, like that the Vanguard group has increased its position. BlackRock has decreased a little bit, but there's a little bit of activity here. Nothing too crazy, nothing too extreme, like any other plays that I've seen before. So I wouldn't hold this to be one of those big, huge squeezes to the moon. Rather, I would consider that there is some shares to be covered, right? We have still 52 million shares to be covered, which is about 21% of the free float. So there are still some shares capable of being covered. I just do not think now is the right time to hold and pray. Um, I'm basically going to look for a good price target today, sell out, watch that, and then wait for the next possible squeeze. I'll probably buy back down. I do see a very strong support down here, however, at the 80 cents, but then we'd have a very much stronger psychological level at the $1.10. And then there's a lot of levels that have developed now that can help us a uh, maintain prevent us from going to sub dollar, right? We don't want to go sub dollar because then these big naked shorts over here, they can cover with ease. So there's a lot of support now developed in CEI for buying pressure that will prevent these institutions from covering their shares comfortably. So that's the case that I'm looking for. Futuristic squeeze for sure. Currently, again, I'm leaving soon from this company, from this squeeze. STC was another very nice one that I've been keeping an eye on. I really do like this one, considering the consolidation as well. We are currently at the 100% utilization, and we have stayed at the 100% utilization. We've really just been waiting for the cost to borrow to increase. So when the utilization is 100%, you're going to stop seeing selling pressure because there's no more shares that can be lent out to be sold into the market. So selling pressure decreases, which means bulls start to take over, right? That's the great thing about this utilization data point. When there's 100%, your selling pressure is decreased, and it has been 100% the last few days. Now, that doesn't mean the selling pressure will completely remove itself, right? You still have people taking their profits, leaving, and then coming back lower potentially. But you also have naked shares, which are not legally binding, and you will not be able to take a look at how many naked shares are being borrowed because naked shares are naked. They don't exist attached to anything in the market plumbing, right? They're just, poof, I made a piece of paper, I'm selling it on the market. That's what the institutions like to do. So when there's no possible shares to be loaned, meaning that utilization is 100, this is where you will see failure to delivers begin to come back because they need to keep the pressure down. So there is still a selling pressure possibility, but with current legal issues of naked shorting, that could be a very risky situation for these market makers. So there will be pressure for the selling, but I don't think it's going to be as rough as it was before unless These big institutions want to get caught red-handed in the cookie jar, which I'm sure they have ways around it too. They have lawyers and all that jazz. Regardless, SDC looks very strong to me. We have gotten, let me see, what was our past, right? So we got up to the 16 mark. We don't really care about the 2020. The historic high was 21, so there's a good chance to recover to that space. But in January, we went up to a very nice $16. So that's a good potential place, but we do have some resistance in the way. Currently, however, we're consolidating nicely. We just came out of a bull run. We're consolidating, yeah, very nicely. Our pop should be upwards because of our previous growth, consolidation, and then previous next possible growth. Whenever you see a pennant forming after a bullish run, there is a high probability that there will be another bullish run, considering the other pieces of data, including the fact that they cannot provide more selling pressure, including the fact that they still have to return 58% of the free float back into the market from those short shares, and including the fact that there's still 58 million shares being loaned and shorted, ready to be returned. Considering, well, I would say these are just loaned. These are the actual current short interest values. So 46 million shares need to be returned, but an estimated of 58 were loaned. So that value difference, the 12 million in between, probably means that they have not made a choice yet, right? So they're just holding these shares, waiting to possibly sell. So there's maybe 12 million shares left to be actually sold. So let me kind of make the connection here a little bit nicer, because I know I just kind of went into another piece of data, right? Another piece of possibly confusing data. Let me get my little handy dandy writing tool. So imagine this, right? This value, 100% utilization, is directly related to the shares currently on loan. But on loan does not mean shorted. You can have a car on loan and you're paying for that car and you're using that car, right? But you don't have to have a shorted car in the market, meaning that you sold the car you just borrowed. That is what shorting means. So you can loan 100% and have 58 million shares loaned currently. However, from those 58, only 46 were estimated to be shorted. So from the 58 million cars that were loaned, 46 million of them were sold on the market. And then they have to return it, because a loan means a temporary borrow. You cannot just sell a loan and never think about it again, right? So there's a difference of about 12 million shares that possibly are still hovering in the ownership of these market makers slash institutions slash banks, whoever is involved, or even retail, right? Anyone can loan these shares or borrow these shares. So there's about 12 million shares still as firepower available to be continually shorted, possibly being held for this moment to try and break down the pattern. So the problem here is that when we do see some nice patterns in our technical analysis, of course, the big guys want to break that pattern. That's what they hold these loaned shares for. They want to break the pattern so that the technical analysis falls apart. And that's kind of the strategy, right? When we see a bull flag, we expect the actual response from a bullish trend here, and then a consolidation here, and then we expect this, but they could introduce those 12 million shares that are just being held and have not been shorted, and they could introduce those shares right here and break our perception based on the technical analysis that we would expect from previous situations. This is why technical analysis is really hard to work with on these short squeezes, because there is still a third party or another entity that is also watching these and is also trying to break our previous historic perception of technical analysis. The whole concept of technical analysis is psychological. Why does it work? Because people use it. Why do people use it? Because it works, right? If we did not have any of these tools, we would not see the patterns that we see within the market. It would just be a completely random process, people buying randomly, people selling randomly. But because there is a whole subject of technical analysis, and everyone is, or everyone that knows technical analysis, is watching for those particular cues, they are playing those actual cues they are watching for. They know it's going to rise up and fall at some point. And then when it falls, they're going to sell up here, buy at the bottom, catching it. And then they're going to sell over here, wait for the next drop until we leave the pennant and buy back in. So they're trying to optimize this, whether it's a person or a computer program, because a computer program would be a lot more mechanical and it would actually show these patterns a lot more. And because there's so many software units out there processing data and watching technical analysis, they are essentially also contributing to the existence of these technical analyses, right? So again, technical analysis is nothing more than psychological analysis. You are looking for patterns that people already know, and they are so using those patterns because they know those patterns because they exist. So it's a self-fulfilling prophecy. But because it is just a self-fulfilling prophecy, there is no particular binding truth to technical analysis. And therefore, someone that wants to break that trend with 12 million shares could do so at any point in time, just trying to break the perception and lowering the confidence of those that are in the stock. That is my point here with TA, right? So keep that in mind. Now, for the major case scenario, I do see this as a very good play. We do have plenty of FTDs available. We have a lot of shares still to be covered. Yeah, they could try and introduce this 12 million difference in, but that doesn't mean that's not a lot, honestly, because the free float of this company is still 101 million per day. So 12 million is only like 12% of this. And that's not a lot of selling pressure when it comes to the actual retail market also binding behind and buying up those values. Now, if I take a look at the institutional versus retail ownership of these particular, of SDC specifically, it'll load for me. Come on. Come on, babe. Come on. No, ownership, please. Thank you very much. We do still see pretty big institutional. This makes me a little bit not so happy, right? So there are a lot of shares that need to be gone. We do have individual insiders holding, hedge funds holding. So again, the variable is leaning towards the institutions. If they wanted to, not only could they introduce those 12 million loan shares, but they could dump all of their 70 million shares. That would create a similar dump like CEI. I don't think they will do this because the actual general public is waiting for a cheaper buy. So as they are selling it down and the price returns down, SDC is one of those big currently talked about stocks that people will buy it when it reaches to $1 or $2. People will stock up on this one. So they're holding this to kind of restrain the strength of our buying pressure, which is understandable. They're not going to sell these unless it's a dire situation. Let's see who owns. Vanguard increased, Capital Management increased. Where's good old Citadel? Morgan Stanley increased, BlackRock increased, decreased. JP Morgan, Citadel, Citigroup. I'm very surprised Citadel is not in this list. That does raise the question of the fact that Citadel is not the only one playing a dangerous naked shorting game. So no ownership there, but they could be still shorting it because we still do not know any details on these shorts. They don't report the shorts because it's not a legally required thing, which is really stupid. They should report every little action they have because it's the friggin' stock. But, you know, these companies are close with the politicians, so they call the rules. Anyway, I do see a good flag. This Okay, and why would this matter? Well, again, remember it's psychological, right? Why does this pennant, this triangle matter? It's psychological. People are waiting for us to break out of this upper triangular formation, and then FOMO starts to come in. People know about this stock, right? They've seen it grow drastically back over here. And before this, potentially even further. Same. Oh wait, it was up higher. I think it was like 25. Yeah, so we had 21, right? So we had 21 on the map. And this is actually still a really good buy compared to that value, historic value. So people are waiting for us to either break up or down from this triangular formation. If we break up, people will buy, and then that'll create the next upper movement that we expect from a uh, bull pennant, right? But if it goes down, then we know people will sell because they expect that value to go down. So that's why it's a little bit drastic in the aspect. I think they might introduce some selling pressure here just to break it down, but I really think CEI is a much bigger monster right now, and they can only focus on so many things at once, guys. We're all over the market right now. There's so many squeeze plays happening all over the market that these corporations cannot keep up with every single popping squeeze that happens. So that's why currently we're sitting at a very nice pennant here. CEI is growing in the aftermarket another 30% with a lot of buying pressure still present and continuously going forward. All right, so that's kind of there. Um, I do want to go over GREE, which was uh, SPRT at one point in time. What happened with GREE? That's the big question. Why did it go down? Some of you are still holding this. I left. I didn't want to risk anything. I told you all the plays I had in mind. I told you that they were all temporary. They were not hold plays. They were get your money and leave plays. And GREE is of a similar nature, right? So the utilization dropped drastically since that particular stock merge. When it merged with Spirit, Greenridge kind of became the main host of the stock values. Now I made 5,000. Well, I made 7,000. I lost 2,000. So I'm balanced at about 5,000. That was one account. The other account, think about the same values. So that's the question mark. The big question mark behind this company is what happened or what happens after a company merges with another. We're still waiting on possibly those short shares that were all over SPRT. They were ravaging the whole SPRT. We had 100% utilization. We had millions of shares on loan. We had a huge cost to borrows. But what happened after the merge? I cannot tell you that. I cannot tell you if they were just erased from the market or if they will be carried down into GREE. Maybe there's a delay. I just do not know the piping of the market that much to tell you what actually happens when two companies merge, what happens to the back option derivatives and the shorts sales and all the extra um, pieces of stock detail. So I'm staying away from GRE. If you made some losses, sorry, I'm still holding on to my losses, honestly. I don't know if it could go back up, but again, the losses were minimal compared to how much I actually gained from this. So keep that in mind. GREE still is weird to me. I don't understand it, so I'm not going to play it, and that's the end of that one. Oh, and a little bit about the whole risk assessment, right? I want to kind of give an idea what I look for with risk situations, right? So let's say I have not bought anything of CEI. Where would I go in? Now, if I didn't know this pattern, right? If we had up to this point, so imagine that this doesn't exist. This is just gone, right? Let me try and make it more gone. We don't know what this is. This did never happen, right? Kind of chilling up here, right? So we are on this day location. We see a nice big green candle, but we don't know what to do. Well, your analysis should be like this. What are your risks and what are your possible profits? So you have a couple of risks. Oops. Based on the support lines from previous values. We had this risk. We had this risk. And of course, we had this risk here. Now, we didn't have too many options here. These are very low supports, very weak supports. They didn't have multiple bounces. So in this case scenario, you're looking at a possible drop down all the way, which is actually what happened, as if you remember that, right? But the case is, if you are here, what's your risk down? It's like walking a tightrope. If I gave you $100 to walk a tightrope from 5 feet up high from the floor, I think you would do it. It's not a very big risk, right? You would walk the tightrope. If you fell, you only fell 5 feet. So your risk is 5 feet, no particular damage to you, and your reward is $100, right? But if I put that tightrope on a building and you're walking a building to a building, what is your risk now, right? You're up here. You're up here. So the risk when you are down here 5 feet from the ground was much less. So you would be like, all right, sure, I'll walk that tightrope. I'll try to get the $5 or $100. If I don't, then I just fall 5 feet. But when you're up here, you're walking a much higher distance. Your risk is huge. You could die. Then you say, hey, is my risk of death or breaking my ankles and arms and legs and possibly cracking my skull on the ground, is that risk worth $100? That is your assessment at any point in time in the stock market. That is how you figure out how much am I going to gain and the probabilities of me gaining that versus how much could I lose and the probabilities of me falling down and cracking my skull, right? Now, if you're a really good tightrope walker and it's nothing for you, then yeah, you could get the $100, no problem. Your risks are really low. And that's if you're a really good trader, if you can understand all the details in between. But if you just never walked the tightrope before, you're probably gonna settle with the lowest distance down. Okay, so that's what we focus on when we talk about risk and reward. How much is the risk down to the reward up? So if we take a further analysis on this, our reward could be this value. If I was here and I said, okay, let me see, I am here, right? I'm looking down and I'm saying, all right, that's a pretty small risk, but there's no big support. So I would have to technically consider this to be a risk also because there's still kind of no support. Two of those would be nice. This could be a good stopping point, but let's go further down and just make sure I completely understand my risks and understand the support values, right? These are really low support, so there's an easy way down for us. What's my reward? Well, it is up here, but the chances are very low because if we take a look at the further details, we do have a couple of other resistances in our way, right? So you could even say, hey, look at that middle point. When you're looking at your resistances and your supports, you can really just zoom into this space here and say, hey, what are my risks and rewards? If you can tell, the risk underneath is lower than the reward above, right? This does give you a good entry point. However, that's if you don't look at the overall picture. The overall picture is not just this location, but rather this location. Now the risk and reward is not so good. It's almost 50-50. There might be a slightly better reward up, but there is a huge risk down. So this would not be a good place to enter. But these supports stay. So that's kind of the idea. If it's not a time now to get in, don't get in. Wait. And what happened? Well, look at that. Look at this. Look what happened, right? So we fell through those, no problem. There was no real support here, maybe a little bit, but not much. We fell through those. Now you have relocated. Now you are down here, right? I'm not really playing the current time period, so just to kind of prevent distractions, I'm going to erase this technically. As if this is erasing, but let's imagine that we don't know what this is yet. So we're about this value, and then we say, all right, let's reanalyze our risk and reward. That's the next step. Time changes, don't be forced or don't be Don't feel like you have to enter at this moment, right? Things change all the time. So always, if the risk and rewards do not match and they're not good, then wait and see what happens. Because look at this now. Our risk has been drastically decreased. What's our risk now? Down here, about this 80 cents, right? So our risk down has been drastically reduced from here to here. But our reward has absolutely skyrocketed. So this would be a good location to enter. That's why it bounced back, because people follow these risk reward concepts. So now when we look at the risk reward, well, we're starting at the yellow value here. Our risk, very low, 20 cents per share, 30, 50 cents per share, something of that value, right? And we've already bounced off it because we saw the future already. But our reward is dollars, $4.50 up. So most people make sure that their risk value at the bottom is less than their reward possibility up. Because yeah, you could lose something. That's fine, but just make sure you don't lose a lot. Keep your probabilities open, right? This is what you saw in my particular plays. I had a lot of gains, but I had losses also. I'm not perfect. No one's perfect. If you think you can play the market and have a 100% process, good on you, buddy. But it's not going to happen. So this is how you take good gains and pitch them against minimal losses, right? You enter a play or stock at the right moment where your negative bottom part, you're 5 feet from the ground instead of up here on the skyscraper, right? You're not going to walk the tightrope up here because you have a long way down and you could fall. But you're okay walking the tightrope down here because if you fall, yeah, you can probably hurt an ankle, but you'll be alive, right? So that's your risk assessment in the tightrope analysis metaphor, right? So this would be a perfect entry point. You have plenty of upside. Of course, you do have those supports or resistances, but if you enter here, you're still looking at a couple of possibilities. So you don't have to have this huge growth, right? You could still have this growth. That's a 50-50 right there. Sure, 50-50 risk gain. You could also have this one. Maybe we go past that and go up further, right? And then we can have more like a 66% good upward movement or a 33% downward movement. And you can keep on increasing it because maybe we broke through all of those just as easily as we broke down through those, right? Maybe there's not enough resistance anymore, so we can actually go back up if the buying pressure is up. So this would be even more possible here because there is no movement that shows support or resistance in between where this red line happened. So your entry point is very important. And this also helps the squeezes because they can push it down. But when we catch it at a nice, profitable, low value, we are holding at an advantage over those that have sold shares that they do not own on top and are paying interest to hold those shares they do not own. While for us, we're holding at 87 cents and we don't have to pay anything else. We just hold. So that is now a very strong floor in my perspective. This right here, 87 cents, very strong, and I do not see us leaving below this anytime in the future. Potentially even the $1 value for me would be very strong, but if they do something like this again, we could see more selling pressure, but it will not go underneath 87 cents, considering also that the shares have to be covered as well. So that's kind of an assessment to your risk and reward. You're using technical steps, resistances, and supports in order to analyze where you currently are and how many up there are, how many down there are. The least there are down, the better your position. You don't want a big risk underneath you. And plus, it's a cheaper buy. Why buy it up here, right? I mean, it could go back up. It could have went back up. But there's so many plays on the market. If you analyze every play and find those perfect little risk reward locations, you don't have to be stuck with one specific trade. You can wait for others to develop and then come back to them later. It's a bit of a full-time job when you're analyzing it like this, but it does make money and consistently. So analyzing risk and reward, finding that perfect entry spot, and if you don't find it, go to another stock, right? So that's kind of the idea behind analyzing your risk and reward. I think I've done a pretty thorough analysis on it. I may not actually do its own video, but I hate formatting. I hate managing, editing, and all that jazz. So if anyone wants to edit stuff, I'm very happy with that. I'm already doing too many things at once. So now let's look at the broader market. Okay, we're going to enter into our trading view. So now we're done with our main plays here. Well, let's actually do some analysis on all the other plays before we go to the broader market, right? So I've got some plays over here saved up that I like to keep track of. I haven't looked at them very well lately. SDC is one of the big plays happening that I like, so that's why it's on the very left. Workhorse has 100% utilization. It does have field to delivers. Not a lot, at least not a lot lately. But I'm keeping an eye on it to see some pops. It has low cost to borrow, so they're not pressured to return their shares yet. But this could be a good minimal price to buy at. $6 is not so bad. That would probably be a good place to be right now. AMC, we know already. There's no analysis to be done here. These hedge funds are playing hot potato with these shares and these naked shares and these FTDs and God knows what else, but they're not winning very well. They still have a lot to cover, especially live shares. Out of 114 million shares, they still need to cover 105 who were already shorted into the market. So nothing to update here. That's kind of why I don't necessarily make a video every day. There's people that will just literally make a video and say the exact same thing they said before, maybe read a couple of DDs from Reddit, and then whatever news articles they can get. They do it for the views. I don't necessarily mind. I just like to talk about stocks, and sometimes there's nothing stock nice or there's nothing stock no stock subjects that are popping, right? You could try and make stuff pop by going to Reddit and talk about all the corruption in the system, but we already know this. We know there's corruption in there. Let them do their researches and try and expose these corruptions. For me personally, I just like to pop in at the right time when things are getting interesting, like CEI and SDC, and pop in and say, look, this is some interesting stuff, there's some potential here, and so on. Vinco BBIG, I liked you so much. You are cooling down. Yeah, I did lose some on BBIG, didn't I? It came in at the wrong time, but I'm probably going to go back in at the better time. So again, risk reward. Again, we're both now looking at risk reward, right? So let's take a look at this quick chart here. What's our risk and what's our reward? Well, we're here, right? We're here. Our risk down, possibly here. Our reward up, possibly here, with some in between support resistances that we can see from previous locations, right? But look at this drop. This quick growth up does not give us much resistance, right? So if I look at the very first possible reward location here, risk reward location, I have a bigger low, bigger drop than I do have a bigger up, right? So I'd have to see something drastic in the data. Maybe the cost to borrow to skyrocket again, right? Maybe the utilization to go to 100%. So I'm sure the selling pressure is completely used up and they cannot force the stock down and cause people to sell because they're scared. They don't know how to hold, right? But BBIG still has a nice potential. I'm looking at it very thoroughly. I'm waiting for specific data pieces. So the next time I make a video, it's probably going to be about BBIG because at that time, possibly CEI and SDC will be already done. But at the moment, I'm looking at maybe dipping my toes inside of BBIG. And potentially, I still have a couple of shares in there. Let me see. Yes, I do. I do have a couple. I have one share because I removed them. Right. I keep it there just to keep looking at it because I know I still want to work with that BBIG play. So right now, probably not. I'll wait for it maybe to drop down a year, if it even does, because that's kind of the situation. This is very much looking like AMC, right? There's a particular pattern that I do see between AMC and BBIG. AMC had two blow-ups, right? We had a blow-up here and a high here, but notice that we never dropped back down to that previous support here from the previous high. And then we have a new high here. We got some in-between resistances, supports right there, and then the smaller ones in between, right? So we have we have kind of this empty air, space of air. That's kind of what's bothering me here for AMC. However, I am very determined to understand the value of this air. What is this air that we have not broken through yet? Well, if we take a look at the value, the price at that, I think it's about the 25 to $30. So 30 to 35, 30, oh, 20 to 35, $20 to $35 values. But this is looking at it on a smaller scale. This air that I showed you earlier is actually our fundamentals from our past coming back to support us. I have to go really back in time though, right? So this is the location here where it's helping us. People see the fundamental value of AMC, and we are not dropping down below any of these big supported levels, right? So that's why I really like AMC. It has a fundamental value now based on its past and its current growth with movie sales, theater sales, ticket sales, food sales, everything, right? They're actually doing very, very, very well after the whole pandemic situation. So, in the concept of things, I do not see us breaking down below here because of the fundamental value. People will buy it up because now they see a fundamental reason to buy AMC, even though the big institutions are like, oh, AMC should be $1 and BS, 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 we're short of the stock and we're complaining because we're losing sort of explanations. But I do really see a very stable location here now. So we are not going to drop down below this 22 or 25 to 35 area. We're going to be hovering above the fundamental value. Now, I do again see this similar process, right? Because we do have two blowups with BBIG. BBIG's past, I haven't quite analyzed, but there is still this pocket of air. Unless, no, we've actually touched it. No, there is no pocket of air. We have actually consolidated right above it. Good. So, we're trying to consolidate. So we're trying to kind of basically find and form support based on the previous high down back in June, correct? In June. So we're kind of battling up and down between these values. Considering what's happening with the utilization, the shares to cost, the current shares on loan, and about the FTDs, they're not going to be able to push it down, maybe temporarily, but only that'll create even more support. Because notice that even though they pushed it down here, they pushed it down a little bit here, it's now created a new support level. So in the future, we could be bouncing here and possibly not even going as low as the next one, right? So 4.5 will not be a value we're seeing simply because of that detail. Now, the past is pretty okay with this. I guess we can consider some particular supports here. Support here. And supports here. Resistance here. Makes sense. And then a lot of resistance here, which we couldn't pass before. So we are kind of looking at this. We're looking at these kind of values happening from the past as well. They are coming back, supporting us. And looks like, yeah, one of those is really, really strong right now, which is also from the previous support here. So I'm looking already at so much support based on this value here. This 4.5, there's no way we're going to drop down below 4.5, $4.05, 50 cents. So it looks very nice. I think we're consolidating. This would be a very strong low risk situation, right? We could drop down, but it's shown so many times that it does not want to go down. In fact, the selling pressure drastically increases when it goes close to that below 4.5 level. Now, if I zoom in a little bit, I want to look at the volume bars, right? Yeah. Look at that huge blow up and drop down. The volume increased drastically when it got near this low volume area. Was a nice kind of consolidation volume bar. But yeah, the volume lately has not been very well for BBIG, so I don't know. It could potentially fall back down, but I don't think the probabilities are high. Again, this would be another one to dip your fingers in, but don't go YOLO on. Greenridge, we already went through it. Nothing interesting. Unknowns in the merging of two companies and what happens to all the derivative options and tools, instruments. FUV has been on my radar. It's getting there on the utilization. It's getting there on the cost to borrow, but I keep seeing that the percent of cost to borrow keeps decreasing. So I'm not too confident yet that this would be a right value. It did get really high, really high. So this value at 10 is a very good discount buy, but it has also support down at the 7, 8 value. So I wouldn't touch this yet. Again, another dip of the finger just in case, but I wouldn't dedicate any huge thought about it yet until this utilization goes very high, where we know selling pressure has decreased. There is none, unless it's, naked shorts. We do have a 34% loan on for the free float relation. 9 million of those 10 million are actually shorted. And the failure to delivers, I'm pretty sure, were pretty high as well. So that's also another thing to look at. But this play is going to be a bit of a cooker. We've got time until we get 100% utilization, until the cost to borrow increases to unbearable levels. So that's why I'm keeping it here. App Harvest was a nice look before. I think I possibly tried it. I think I lost some money on it. Let me see. What did I do with App Harvest? App Harvest. APPH. Maybe it was in my other account, so I don't know. I tried it a little bit, but I didn't. I saw that it was not doing anything, so I left. Possibly my other account. Oh, I bought some options on it and they got expired, worthless. So I'm not the best at options at the moment, but I probably have a net loss on options than I do. So I'm not going to touch those too often. So ABPH still has potential, failure to deliver potential for sure. For sure, for sure, for sure. Look at these, look at these. 15 million on this bar. No. Failure 3 million on this bar, another 3 million on this, and 2 here. There's just so much failure to delivers, but those don't really mean anything soon. These are cooking for the next possible utilization max out, the cost to borrow max out. But it does have potential, so I'm keeping an eye on that. Could be months for this one to cook. CLC Clover Health, CLOV. I don't know why it says CLC over here. So CLOV ticker, low, decreasing, percent change up. I have to start the market to see what's happening here. Another one just like App Harvest. It's cooking, but it's not. And to the right, the more I go, the less I think. Actually, that should move Ethereum somewhere over here. It's ATER has been cooking as well lately. They have a lot of on-float, 80% on-float. It's at a good risk reward area. If we take a look at those risk rewards, there's our risk. Here we are. There's our reward. There's another possible reward. There's another possible reward. There's another big money maker. So our risk is low. We are at a good buying spot here, especially since we do see a bit of a bull pennant forming here. We formed it going up. Doom, 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 doom. And I remember the technical analysis, psychological, people want to see it break up and then they will FOMO back in, creating another burst growth. So that's not a perfect indicating factor, but it is one of those particular ones that would be useful. It's kind of slanted downwards, so a little bit weak, but still a possibility. So this is a good point to get in. The price is pretty okay low. It could get down back to whatever this value was, but probably like $3 or $4. So it could have a chance to go down. Dip your toes in, see what happens. Good perspective there. What's the next one? That Harvest Clover Catapult. I liked it. And I still like it, but there's something odd happening with Catapult. It's not very active. The volumes are very low. What it seems to me is that there's not a retail participation in Catapult anymore. It was one of those big squeezes in the past, and people just didn't stick to Catapult. KPTL, KPLT. Let's see what the ownership looks like. I haven't seen it before. Yeah. Institutions, look at that. No, 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 no. Yeah, Catapult's probably institution trap. So I probably won't even touch this one. I don't know why I have it up here. It's a really difference. But considering that, if you're holding your shares, you're still gonna look down at like $1. If Catapult goes to $1, watch as the general public takes all of the shares. If it goes below $1, oh buddy, that's a big buy. So I probably would not go in because we need to take some of these guys' shares. But it's not a good value to take them at this Catapult 5. So I would wait until it gets to like a $2, maybe even a $1 again. But this is definitely a long fight. Catapult is a long fight, not something to make quick money off of. 90%, what was this one? Zev. Oh yeah, I remember talking about Zev, or somebody talking about Zev, so I wanted to add it to my list. I liked it. It does have the FTDs as liking. They're increasing over time. Utilization close but no cigar. Cost to borrow pretty high, but still losing over time. It's decreasing over time. Okay amount of current shares on loan. So still it's at the end of my list, so it's not a very big one. CEI. This was the reason I put CEI at the end. There was no FTDs, but I just you notice this kind of pop-up process, and in reality, not buying the dip situation, that probably changed. Again, we looked at what CEI. It had more institutional ownership, but remember, when it's the cost is low. No, CEI. Oh yeah, this was the one with the complete general public takeover. Okay. We probably took it over when it went down to a couple of cents. Remember that factor. So this is another interesting one. It doesn't have the FTDs like I like to see, but it definitely does have the public backing. People are holding and forcing the shares, whoever is in there, to cover. They have a lot to cover. I mean, those 21%, 2.7%, they're probably not listed in the shares loaned, but they probably have a good amount related to the stock since they're active in the long term. Because again, these are holded shares, these are held shares, so these are all long shares. So there's 101 million long general public holds, and then there's 2.7 million institutional longs. But a short does not get counted, so it's not going to be referenced in this ownership breakdown. However, if there's 2.7% involved, we know that institutions like to play both sides, so try and reduce their risk. They play these little games where they buy a long and make a short, and if it goes up, at least they can make some money on the long, and if it goes down, they're going to sell their long and continue with the short. So they try to play both sides. So if there's 2.7 playing long, I would imagine there's a lot more playing short. So CEI is very nice. I'm going to boost it up to the front here. Probably save it. AMC's cooking, man. I really want to put it up here in the front because I feel like it's very close to popping. We're getting a lot of support and it's nice looking. Let me create a new snapshot, and that's it here. So that's it for the market. Let's take a look at some crypto. What the heck happened with Shiba? Well, Shiba's interesting. Oh, it's still popping. Oh, whoa! This is now. This is the last hour. It's popping back up. Look at this sucker. That volume bar. What's the volume bar? Where's my volume? Where the heck is my volume? Why do I not have volume? Oh yeah, look at that volume bar. Huge uplift. That is a bounce like a MF. Okay, so Shiba just consolidated down as we were speaking. I don't even remember seeing this bar earlier. Probably been speaking for what, an hour now? Yeah, an hour. So that 1 hour bar just popped up, which is pretty, pretty intense. Okay, it's a little lighting. So that's good news. What's the overall market looking? See the total. Total looking very strong. Oh, we're going to be testing that previous. Oh, we're testing the previous high. Okay, okay, that's good. Uh, Triple might be. I mean, we've got rejected 3 times on the third, so potentially we have a lot of support in the previous to actually bounce us back up. Potentially, we're looking at something like. It's going to try again. It's going to get rejected. The color sucks. We're going to try like now. That's too thick. Gonna try, get rejected, but we do have a good playground to play around all these lines and then break out eventually. But this is very strong. We have good support underneath. We have low resistance. The resistance gets eaten up every time we get to that point, right? You can only touch it so many times before it gets eaten up. But the bottom, the support is strong. You've got so many lines, as you can obviously see, of support happening now that we're up here particularly. So look for a very big bull run soon. Don't be too optimistic though, because my expectations are about 3 trillion, 3.5 trillion, and then we drop back down and have a crypto winter like we did back in 2017. So keep that in mind. Keep that in mind. I will post if I'm correct or incorrect on that, but I do really see some very big correlation between 2017 December, was it? Or was it 2018 December? There was that big spike when Bitcoin went from 2,000 to 20,000. That winter afterwards, right? So Bitcoin's probably going to go ham too. What's Bitcoin doing? I like to watch Bitcoin, but I don't like to keep up with it on a consistent basis. Ooh, Bitcoin's at 54. How smexy. Oh yeah, everyone's talking about the whole 100K Bitcoin stuff, so very nice. But I'm expecting to have it go. It can go up to 90, 100K, but it's going to drop again. People are going to take their profits. It's going to go way back down to 20. I think 20 is a very good resistance space. So we'll see what happens there. Volume profile might be nice though. Yeah. There it is. Oh, it could go down to 9. That volume profile. Fair enough. Oh yeah, here it is. 17th, December 17th, right? So it went up. If you look at it in a closer perspective, because the 1 day is not going to give you all the bars you need to really match this. But if you look at this 2017 December area and the 30 minutes, you'll see that it has the same hill, drop, hill that goes super high and then drop. And that's the drop here, right? So we're still working up here in this area. We're not quite up at the highest point possible. We're like over here working our way up. So if you do a little bit of comparing from 2017 to now on the micro level versus the macro level of the candle bar timing, you'll see a very, very coordinated comparison correlation. So that's what I was working with. So we are going to see a big boost and then drop again, just like we dropped here. Right? We went from 20 down to about 6, so we're probably going to go from 100 down to 10. I think 10 is going to be the holding spot because right now we have a nice volume support at 9, but 10 is a psychological level, so 10,000 is going to win because it's so close to 9. What about the monthly? Oh, there is no volume bar on the monthly. That's interesting. Daily. The daily is good. Daily, we're strong above it. We have a good process up. So that's nice with crypto. So crypto and a bull run entering. If we pass that previous high, we are going ham on the crypto bull run. We're round two. What about total two, the microcaps? Microcaps are already, no, they're getting rejected also. So microcaps getting rejected is the same way as the Bitcoin cap. So total versus total two. Total just is Bitcoin included. Total two is just the smaller caps, but Ethereum included. So, but I do see that total two is closer to our rejection. So it's consolidating well against our rejection. No, yeah, and Bitcoin is a little bit further away. So there's a slight strength difference between total and total two. I would say total two is actually very strong compared to its past because people are interested in altcoins now. Dogecoins, Cardanos, Solanos. I don't want to talk about that rocket, that white sauce rocket. That why people make such weird cryptos, I don't understand. Don't worry about it. If you don't understand, it's not important. It's actually really stupid. But Elon Musk tweeted with emojis about it at one point, and then that skyrocketed, and that was retarded. So crypto looking very healthy. Let's see. Again, Shiba is looking very, 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 very healthy. Like I'm really liking where Shiba's going. Shiba going back up heavy, creating another bull run on the daily. On the 4 hour, it's entering a bull run, so it could actually, if it breaks through the 9 MA, which is the yellow line, we should have a nice bounce up into a bull run. The 1 hour looks delicious. It's already above both MAs, moving averages. 30-minute looking very snacky. 5-minute, loving it. And the 1 minute's useless. 1 minute is just for dramatic effect. Everyone on the internet loves to put, or everyone on the streams loves to put the 1 minute because the bar goes And honestly, that's just the serotonin, man. That's like you watching it go up and you're like, yeah, serotonin in my brain. And then it goes down and you're like, oh no. I don't like the 1 minute candles. No, really. So what else? Let's heard about vets. People talking about vet BNB looking sexy. Yeah, not really. Good buy though. Good buy maybe. BNB losing traction. Maybe people are moving their money into other growing pieces, but it was doing so great, and that one buff they had up to 800 was amazing. I'm not gonna keep track of that. ADA is one of my loves. I love ADA right now. It has a lot of potential with the banking industry. Ethereum sexy, but oh my god, if you try to make an NFT and pay the freaking gas price, it's ridiculous. Like 250 bucks to make your NFT sellable. Get out. Solano, I am also falling slowly in love with Solano. It's doing very well. I'm liking Solano, so I'm kind of in it as well. XRP has been good, but it's been just fighting with the government, man. XRP's got so much potential. It's a big competitor with ADA, but they have some legal issues with the US government. Doge, kind of relaxing a bit, looking like it's trying to consolidate around the 24 cents, get a nice floor. Actually, it's a very nice floor. I can add this here for a good support level. And then the risk is low here. Your reward is up 26. Your risk is down not even half a penny, but your reward is about 3 pennies up. There's your entry point. This is a good entry point to get in, or maybe wait a little bit, but based on these candles, every time it goes down, it gets eaten up, so I don't think it's going to reach down here before it gets eaten up for the next bull run. The RSI is low, so it's going to reverse itself up. Looking good. Litecoin had a weird, a weird thing. Fake news on the Twitterscape. Apparently, they were trying to. Someone was posting that Litecoin was accepted at Walmart, and that had a hell of a bull run. Was it here? It's got to be in the daily. What? Oh, there it is. Look at this. Look at this. What no? Oh, wait, here. Had a bull run because of this weird rumor that Litecoin was going to get um, accepted at Walmart, and then it just bombed. It went up basically 300% and then fell down 75%. It's insane. But here's the problem with crypto. There's no particular fundamentals. So there's no way for us to actually tell whether it's a strong crypto or not. It's all based on community and community sentiment. Right, Kitty? Right, baby? It's all about community. Do you like the Doge? You really like the Doge. You're gonna put all kinds of white hairs on my black sweater. So it's all about the community, right? If a community is, oh, what is wrong with your feet? Why are they so dirty? Ew. What are you doing with your feet? All right, I'll talk to you later. Bye. If there's no community, there's no surge. There's no fundamentals behind it. You can't check if a Litecoin or Bitcoin is doing great in the market because there's no way to measure fundamentals. So it's really all community and psychology and technical analysis. Maybe there's some analyses you can do on power efficiency, depending on how much of its miners are on efficient power, because nowadays it's a big concern for crypto to actually be economic, ecologic, efficient when it comes to power drawing, because there's a lot of situations where people are like, why would we go to digital currency when it takes more energy than regular currency, you know? So there's a big move towards efficient processing rates and power consumption values. So that's one fundamental you can actually look at, you know, which one of the cryptos are taking the least amount of energy to be transacted. And that brings us to other formats. Instead of proof of work, it's proof of stake, which actually specifically you stake your coins, you don't touch them, you can't touch them for a period of time, and that in itself works itself to be placing the miners, right? So those are a couple of the fundamentals. It gets a little technical, so I couldn't really go into the full details of any of those, but there are some fundamentals, but they don't necessarily affect the general sentiment of a coin yet. Because again, if I try to explain them to you, you'll be like, what? What is this crypto? How does it even work? You know, but maybe in the future that those kind of technical details will become more fundamentally stable when people start to really get involved with crypto and start to really understand the concepts of crypto. And then that becomes the fundamental positive of crypto. When people understand the work behind it, the energy consumption, and then they do the research and they say, oh, this one has a better energy consumption than this, and therefore has better fundamentals. Really, in the end, our fundamentals are also very perspective. Um, you know, companies' margin profits and revenues are technically fundamentally good for us because we like to see companies that go up in price and become more valuable. But if it comes at a cost of people's lives, maybe there's going to be a mental change in the way that people think of fundamentals. Because, yeah, if a company's making money, but they're firing people and people are losing their jobs, therefore losing the ability to sustain a decent life, when we switch our concepts of reality, the fundamentals also switch. So that's a very good, interesting point to think about, right? Fundamentals now may not be the same fundamentals down the road when people become a bit more conscious about not just the bottom line, not just how much a company makes, but how efficiently does it make it? How many people does it employ? All those concerns are becoming to be more and more and more um, sentimental to the communities that are getting involved in the market, because now retailers are much more broad-minded than the institutions. Institutions, all they care about is numbers, but the retailers that have flooded the stock market care about their own job. They relate to the fact that Walmart is cutting costs making better revenues, but also cutting costs by firing people. They don't like that, even though they are making more money in the end. The retailer is going to say, no, I relate to that. I got fired at some point, and that was hell to pay. I do not like the fundamental growth in the way Walmart did that growth, right? They're going to say, hey, um, I don't like the fact that people are losing jobs. I'm not going to buy a company, even though you're making more money. That's a cheap way to make money because you are essentially ruining people's lives for your bottom line. That is the past. This is a level of consciousness that has been running the system for a long time through these institutions, through these market makers, the gateway systems that have funded the stock market up to this point. And this point is really going to be specific to retailers taking over the market. So there's going to be a lot of fundamental changes, I personally think, when it comes to the actual stock market. We're going to be concerned about a lot more than just how much money you're making, how many people you employ in, right? How much are you paying your people, right? How efficiently are you working with your energy to make sure that you're not wasting energy and not basically contributing to the worldwide problem of climate change. Whether you believe it or not, I'm not a judgmental person on whether you believe it or not, but you have to have some sort of perspective on the fact that things are changing climate wise. My grandparents work on a little farm, a little teeny tiny farm that they use for themselves, right? They have noticed specifically that the climate, the weather that normally used to be, doesn't happen. It's not the same anymore. You have trees freezing during spring when they're supposed to be blossoming. You have trees freezing and they do not carry any fruit anymore because all the flowers of the blossom were frozen for one random day of cold. I was there for this. So, random changes in this climate is basically affecting specific points that we have to consider. So, whether you believe in climate change or not is none of my concern. The fact of the matter is that look around the world, there's a lot of weird shit going on. It's not about belief at this point. It's about just literally looking and opening your eyes a bit. Um, so yeah. Anyway, I'm spewing down different roads of information that I really shouldn't be anyway. So there's a lot of fundamental changes going to happen. Overall, oh, we haven't touched on the market yet. We did the crypto market. What about the stock market? I'm interested in this sucker. So we talked about this. I told you that at some point this is a bull flag, bear flag. It's going up, it's going up. It should break down at some point in time, right? I told you that at some point, this is the scale, the freaking slope of this growth is unrealistic. We went through this on a different video if you watched it. So the unrealistic slope of this, right, is getting a bit too much. We've broken out of that, which means very interesting possibilities. If I take a look at the daily, kind of compare it back, look at the slope. Look at how we used to be. And here, I still have the little charts of the healthy looking market, right? The little whoop whoop. The sine like wave goes up, has a correction, goes down, goes up, has a correction, goes down, goes up higher, has a correction, goes down. And I thought that this would be the healthy way to go, but for some reason the slope just kind of went, right? But based on Warren Buffett, based on a lot of indicators, this market is oversaturated. It's way too overinflated. It's way too high, way too fast. So we're starting to see a correction. How big the correction will be, no one knows. I think it's going to be huge at this point because the one thing we had before were flash crashes. Boom, boom, right? And it went back up. Now we're kind of having a slow, kind of helpless fall. We might have a nice correction back up, but I think we will not have the fuel to continue. And then we're going to have a big flash crash after. So my expectations are something like this. Good or bad, I don't want to think about it because nothing particularly good will happen from this, right? So first you see political people leaving, insiders trading. We've already seen some insiders leaving the market, by the way. If you look at some of those SEC Rosenberg, I believe was named one of them. So people in the political official spectrum, institutional spectrum, they are leaving slowly because you need people to sell. You need people to buy in order to sell. You need someone to take your bag of crap in order to give that bag of crap to somebody else. And when you're inflated this much, people are not so confident in buying bags of crap, overinflated crap, right? So technically, someone said that the SPY is one of the biggest meme stocks there is because there's no reason for it to go up this high. It's overinflated. Even the Warren Buffett indicator says, no, 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 we are 250% above possible healthy levels. So, and here's kind of a key that I really want to point out. If we go back to March, because we're starting to see something on the macro level similar to what we saw in the micro level. So let's try and go back down to March, where we had our COVID crash. We're seeing this, guys. This is just the sleaziest bullshit, right? We already know people are leaving. We know that officials and political units and institutions, they're leaving. This is what happened in March. Of course, this happened before March. This happened before the rest of the United States knew about this COVID issue. This is the moment in time the United States was officially informed about COVID, right? This was before that. So why did it crash? Remember, there was a lot of concept news items. I believe it was on the Democratic side, but it doesn't matter. They were talking about how Trump was informed about the virus, right? So he knew something about it in the past and didn't do anything about it, right? So he was informed, but if he's informed, everyone's informed. So this location here, which is where it gets really annoying really quick, this location here actually is where all the political influencers, all the official institutions dumped their shares before the news was official. Keep that in mind. And then what happens? The news starts talking about it, and then the rest of us retailers sell off our shares. And what happens? These guys, well, they bought at a discount, baby. A big old discount. How much of a discount? Well, from 300 down to 200. They got 33% off. So they bought back in, but it's not a legitimate buy-in because we still had all of our typical situations. They should probably not have bought in because at that point in time, we still had to think about isolation, lockdowns, all that stuff. So they made it seem like the market was recovering. They made it seem like the market was recovering. And then this weird, huge slope began to form that was way unsustainable, over exaggerating how healthy our market is. And now we are here at a very interesting location because I'm a little scared. We have, oh boy, we have a high, a lower high, a lower high, a lower high. This means we're officially entering a bearish territory. Each time we get to a high that's lower than the previous, we are seeing that same process down. We're basically going in the opposite. Now, it could crash directly, depending on what the news might be, but we're basically entering a downward trend. Just like we saw the upward trend, well, you can also do a downward trend. It's not so difficult to consider, right? So there's our downward trend. Now, typically, downward trends are both bull flags because they should break up positive, right? Just like when you're going up at some point, the reason they call this upward slope, so let's call this a blue line. The reason they call this a bear flag, a bear trend, bear flag, one of those, is because eventually it goes down. So in the other situation, this is a bull flag because it eventually goes up, right? So that's the case. It's just we don't know when. It could be years for it to go back up, but obviously it's going to go back up eventually. So if this was a short one, it should have popped up already. I would give it another month. The October 18 is a big date. We're almost there. October 18 is when the debt ceiling decision on whether it's going to be raised or not. I believe they're extending it to December, or they're discussing to extend it until around December. So December will be the next important date. So I can kind of consider an extension to this little bear bull trend here. So potentially around these values here, we're going to see a breakout or a breakdown, or if it should, there's a pretty high chance that it gets extended to December, we might see this be the judgmental zone of whether we go up or down based on the final verdict, because they're just extending the debt for a moment of time. They're not giving a value of the extension. So that's the issue there. So now we've entered a bearish trend that could pop back up if everything goes well, but it could also break completely down when it loses complete confidence, which means that this potentially could replicate what we just saw over here. All right. We had a nice bull bear trend up for a while. The slope is not the same, but the trend itself is there, right? So most of the time hovering in the top half, sometimes dipping below, still going in the top half, dipping below, getting weaker, right? And then going through here. So potentially, we could be literally here. We have just entered here. And then we're going to go up a little bit and then go straight down. Maybe. But that means that institutions would be selling here. And we already know that Rosenberg and some other SEC insiders are selling based on the actual things they are doing to the market. They are modifying the market and they are selling based on those things because they know it's going to affect the market negatively. So that's bad. Another case is that we're actually not even here yet, which means that we could be technically here if I reduce the size of the sucker, right? And then we entered this location here. We have a temporary downward trend. We have a positive breath of fresh air here. And then we have the crazy crap where all the insiders are selling, not just one dude, right? Not just Rosenberg, but every insider is selling. But this time, I don't know if we're going to have this bump up because we're going to be more aware as retailers what's happening. We should be, at least. We'll see. A lot of people are keeping track. So basically, it could be the case where we just passed 1. This is at 2. We're at the 2 value. So there's 3, and the 4 would be the issue, right? The big issue. So we just passed 1. We might be at 2. I see this to be a lot more comparable. We're going to be at 3 eventually, and 4. What would that look like on the actual chart? So there's 1. Nah, it's not going to be nice. I'm going to extend this. Oh, whoa. Whoa, whoa, whoa. Whiteboard. So this is our 1. We're currently in 2. 3 would be a reversal. And then 4 would be like down, right? So it could be a short situation where we actually do have a small until October. And then we have a breath of fresh air and everyone's happy and people are buying back up. I'm not buying. Sorry, I'm not going in the SPY. It's too corrupt. The whole market for me is too corrupt. We could have a nice recovery. People are happy. And then those insiders are like, all right, it's a really high price and I think shit's going to go down. So I'm going to force the price down by selling a crap load. And there's your 4. So we might have something of this format happening here on the macro scale as it did before in March. Because again, it's not a related factor of whether it's COVID or not. It's just an issue that's happening. And psychologically, institutions and insiders leave first. So we could be experiencing that first leave now, and then the bigger leave, right? And after that, remember that it actually happens so that the market kind of tries to recover. But then it goes straight flop, right? So that's a possibility to happen, where first round of insiders leave, Rosenberg and some others. Second round of insiders leave, institutions, politicians, everyone together leaving. And then some confidence returns because of the low price. People want to buy back in. But then, big drop again. I mean, will this happen? I don't know. I don't want it to happen because that's a huge fucking fall. But we'll have to wait and see. Because the psychology is the same in those cases. You can even compare it directly. Here, 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 and then here, 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 here. But the problem here is that we're so inflated. There's so much depth in the system. we've been pushing the can down from even back in March. We've been pushing the can down, kicking the can down the road since freaking 2008 collapse. Inflation has been stagnating for a long time. That's why most institutions now, instead of balancing their liabilities with gold like we used to, they're balancing it with interest that goes up over time. So in order to keep the power of the cash you have at hand, you have to invest it into something with a percent return, because gold is basically not a stable unit anymore. Since what's his face? Nixon. I think it was Nixon. Since Nixon removed the gold standard temporarily. Right. So keep in mind these details, that the system works in the back end. It was supposed to be a temporary. I mean, even the interest hikes were supposed to be temporary. So many things were supposed to be temporary that over time it just continues to adjust itself based on those systems, and it becomes permanent. So in our mind, our excuse is, oh, this won't be for real. This is just for this moment in time. And all of a sudden, it's permanent. We need some standard. So instead of having a gold standard, we now have an interest standard. You're getting money back from the interest over time. But when you pay money, just imagine interest. You borrow $100. You don't have money, you have $0. You borrow $100. Your interest is 1%. So you have to pay back $101. In a system that only has $100, where's that $1 coming from? That extra dollar? Thin air. That's another introduction to a type of inflation. They're introducing interest as a payment form for the value of the thing that you're actually borrowing. You're taking money out and paying more money on top of it. The Federal Reserve has been doing this for years. They're charging the government money to print out money. So if you're responsible for printing $1 million and giving it to the government, and you're expecting them to give you back $1,000,001, where are they going to get the one? They're going to have to ask you to print it again, and then charge them more, and then print it again. There's just basically this format of issue where the system is so reliant on interest, where interest is basically charging on top of the money that you're using. So if you again have $100 in a full system, you're using $100, and then you lend somebody $100 and you expect them to pay you $101, where are they going to get that one extra in a system that contains 100? And now expand that to 10 trillion, or whatever the depth is of the system. So I'm not seeing very good things in the market. I'm staying clear from the SPY. I hope most of you are smart enough to think the same. But we do see some very, very flimsy things happening. The government, the politics, the economy. I'm sticking to my squeeze plays because those are definitely got to get paid eventually, and the big corporations got to pay back that money. So, all right, I've been talking for too much. An hour and 37 minutes. Ooh, it's so cold outside. I really like my sweater. I just don't like the fact that the cats keep putting hair all over it. But that's it. I hope you enjoyed and got informed of a little bit about technicals, about risk and reward, and about cat hair, and the crypto market, and the SPY, and what's happening. But I really think the crypto market's going to go crazy because of the stock market. When the actual government, or the last time that the crypto went to its highest high, was during 2018 issues in the market, and when people lost confidence in the official government market, the official economic market, inflation and all those things were still a concern. So consider that to be, again, the issue, right? We're seeing a lot of issues happening with the stock market. We're seeing a lot of insiders leave. We're seeing a lot of political backlash and just horrible communication between the two parties, because we know it's all a fucking circus. We know it's an act. Democrats, Republicans, they're the same freaking party. Honestly, guys, open your eyes. So we're seeing a lot of inconsistencies in the system that we've been spoon-fed, and people are very skeptical about the system. So when there's skepticism, there's doubt and lack of confidence in the system that's official in front of you, that's supposed to be the system of choice in the world, the US dollar, the US stock market, and all of a sudden, that one thing that you were told was strong falls apart, you're going to go to whatever's available next. And currently, most people will probably go into crypto. probably also why Robinhood and a lot of uh, these brokers are also providing crypto, because in the case scenario that the market collapses and they do not have the support of the economic system that they're supporting, the SPY, the federal government, um, the New York Stock Exchange, if it all collapses, Robinhood, Webull, eToro, all of them will essentially still be connected to the crypto world. And the crypto world will be the hedge against recession and collapse. So, yeah, be very, very, very aware of what's happening. I mean, it's really hard to, because the news is the only way we can keep up with stuff. So, when you can't trust the news because it's not actually the news, what can you really do? And what you can do is follow the money. Look at the numbers. All right, that'll be it for me. I'll see you next time when I decide to pop up. Again, I'm not going to do this every day. I don't have time to just word vomit every day for 2 hours. If something interesting pops up, I will review it and definitely put up a video. Maybe it could be tomorrow, it could be a week from now, it could be a month from now, right? But if you want to keep up with this info, just subscribe and hit the notification bell. Assuming you don't hit every single um, creator's notification bell, because sometimes I do, and I have like 50 notifications a day, and I can't keep track of my notifications anymore. So make sure that you're very selective with your notifications, your little bell, because then eventually your notifications become a spam for every single person that wants to read a DD from Reddit for 3 minutes and get your view and get your like and get the commission of the advertisement. So if you want to keep up with me, make sure your notifications are clean, not spammed, and then hit the notification and subscription button there at the bottom of the page, and you will be notified whenever I create a new video, which will be random because the world is random, the market's random, and I can't give you a schedule. I actually like the fact that I can't give you a schedule, because if the world was predictable, it'd be so goddamn boring, right? All right. So, peace out. Um, Hope you have a great day. Happy Friday. Let's see what the hell the market's doing. Oh, yeah, I won't do that here. Next time, maybe we'll keep track of the market, but hopefully that was enough of a pre market.